Welcome back to Wealth and Rich, the channel where global mobility meets market intelligence. And the world's biggest decisions ripple straight into your strategy toolbox. Today's lineup is a full geographical feast. We have America, which plans a deeper digital scrutiny for visitors. The UK slams the door on Nauru. Fed slices interest rates yet again, but without drama. And President Trump unveils $1 million fast lane to US residency. And big tech's AI arms race uncovers a mountain of private credit debt that's only beginning. So strap in, and the news is heating up. This makeover of the ESTA system, the ESTA system, shifts optional disclosure into mandatory digital audits. The Department of Homeland Security says this aligns with border efforts to tighten both legal and illegal immigration, especially as the Trump administration pushes its signature mass deportation program. What's striking isn't just the data requests, it's the philosophy behind it. No social media presence, this could now count against you. Public profile is going to be required. Digital silence, potentially suspicious. For global citizens and mobility investors, the winds in the US are blowing towards maximum transparency and maximum scrutiny. The UK just added another country to its growing blacklist, Nauru. As of December 9th, Nauruan nationalists must obtain visas to enter the UK. Why? London says Nauru's year-old citizenship by investment program poses unsustainable security risks, allowing individuals to buy new identities with insufficient checks. The language from Westminster was unusually sharp. Officials said that they lack confidence in the program's due diligence, governance, and the ability to prevent criminal exploitation. This fits into the West's widening dragnet on CBI programs without genuine ties, joining the EU's moves against Vanuatu and the UK's previous cancellation for Dominica. The takeaway for investors: programs without deep, verifiable vetting are losing global credibility very, very fast. And major corridors like the UK and the EU are more willing than ever to pull the plug faster than immediately. In Washington, the Federal Reserve cut interest rates for the third time this year, dropping the benchmark range to 3.5 to about 3.75%, the lowest in 3 years. But peace inside the Fed, not so much. 3 top officials dissented, splitting between those who wanted a larger cut and those who wanted none at all. With inflation still at 3% and unemployment creeping from 4.3 to 4.4%, policymakers are locked in a tug of war because stimulus jobs or restraint of prices. President Trump wants deeper cuts, but the Fed chair, Jerome Powell, insists that the central bank needs to wait for more data, especially after historic government shutdown left months of economic reporting in a blackout mode. Add in Trump's impending announcement for a new Fed chair, with candidates ranging from Kevin Hassett to Kevin Warsh. And the world's most influential interest rate suddenly feels like it's standing on a moving floor. Next up, yes, it's real, everybody. The Trump Gold Card is officially live. The scheme offers foreign investors a fast-track path to US residency and eventual citizenship if they pay $1 million USD and demonstrate substantial benefit to the United States. Business sponsoring foreign talent pay $2 million a platinum card with tax perks will soon cost $5 million. And in rising visa fees, paused applications from 19 countries under the travel ban list halted asylum decisions, and a $100,000 fee for H-1B skilled visa applications abroad. And you see an immigration landscape split into two lanes. One lane is a fortress-style restriction, and the second is a golden escalator for elite investors. For global mobility strategists, the US has never been more closed to the masses, yet more open to high net worth individuals willing to write off the right number. Next up, we have Apollo Asset Management, which says the explosion of AI infrastructure has created a historic private credit supercycle. Data centers, energy expansion, defense tech all require multi-billion-dollar, multi-decade financing. And big tech is borrowing at a very unprecedented pace, while Meta alone tripled its debt in 1 month. John Cortez, I believe I'm saying that right, from Apollo, says that this is just the beginning, while asset-light tech giants are evolving into asset-heavy infrastructure behemoths. Private credit lenders, and not the public markets, are filling in the gaps. It's an opportunity of a staggering scale, but also a test to underwriting discipline. In Cortez's words, this isn't a simple commodity trade. It demands vast analytical firepower, deep origination networks, and long-term risk absorption. For investors watching global mobility, migration policy, and macro markets, the AI boom isn't just reshaping the future, it's redrawing capital maps. If you want the world to feel less chaotic and more strategic, subscribe to Wealth and Rich for global intelligence that keeps you ahead and not just informed. Because immigration is tightening and monetizing, while central banks are hastening and fragmenting, and countries are redrawing the mobility lines. And the AI revolution is turning capital markets inside out. So I'll see you in the next one. Cheers.